2021 was an amazing year. We really probably started with the big rollout of vaccines for COVID across the world, and we saw markets be incredibly strong. The Australian market was up 17%, and we saw markets around the world hitting all-time highs. And despite various COVID outbreaks through the year, what's really underpinned markets was low interest rates and enormous quantitative easing, from nearly all central banks. So liquidity going into markets, leading to pretty frothy valuations. And towards the end of the year, we did see the market start to return a little bit more to fundamentals, as central banks indicated that rates would have to be on the rise next year, and some withdrawal of that liquidity as well. Look, IML had a really good year. In fact, all our funds across IML outperformed for the year, which is great considering the market was up 17%. Look, we had a number of really strong performers during the year. But the first one's been probably Telstra, which we've talked about many times before, and Telstra really in 2021 turned a corner. They've had enormous headwinds from the NBN, taking their fixed line business off them, and they've also had enormous headwinds from mobile competition, with mobile prices being in decline for several years. That all changed in 2021, and those headwinds are now virtually gone, and we saw earnings grow for the first time, half on half for a few years, which is great. And the share price responded really very strongly, up 47% for the year. So a great year for Telstra. Another stock we've talked a lot about is AusNet, which is a utility company which owns electricity distribution and transmission primarily in Victoria. They own phenomenal monopoly-style assets, regulated assets, and at the start of the year, we talked about how cheap the company was. It was trading at a yield, not much below 6%. And we saw enormous growth potential with the company, given the transmission upgrades that need to occur, in Australia to enable the renewable electricity network to be built. And fortunate enough, the company got a takeover bid from Brookfield and APA as well, and that led to the company being up also, around 50%. So that was a very strong result for the funds. Look, it's probably more volatility, unfortunately. We're seeing different variants with COVID, with Omicron now, which is interrupting supply chains around the world. We're seeing very high inflation and the prospect of higher rates through the year. So we see the sort of higher value growth companies, or the more speculative companies that trade on very high multiples. We think they'll come under a lot of pressure as interest rates start to rise and as liquidity gets withdrawn from the system. But there's also, on the flip side, there's a number of good quality industrial style companies that have just been completely out of favour up until very recently, which still trade on fantastic multiples, very low multiples of cash flow, and pay good dividends. We've talked about it many times, whether it's Horizon or Orica or Pact, and these companies, we think can have quite a strong year going forward as money starts to rotate away from those sort of more growth speculative companies to companies that pay very strong cash flows and dividends today. So a volatile year, but hopefully a good one for our funds.